Hey, Dan Passarelli here. Many of you are familiar with our Credit Spread Genius scanner. And since I developed it, which is, I don't know, maybe 9 months ago or so, maybe 6 months ago or so, I've actually learned a lot about how professional traders think about trading credit spreads these days. And I've identified at least three different use cases for trading credit spreads. And I want to share them with you. I think you'll find this pretty interesting. So let's take a look at this first one. This is SI, and of course, this is pre-recorded, so prices are not current on any of this. But SI on this day, when the stock was at 12.16, someone sold 466 of the one day. Well, they're actually just under 2 days until expiration, selling the 12 and a half calls, buying the 14 calls for just 20 cents. So let's take a look at that on the chart here. So if you look, and let's sort of narrow in a little bit on this, take this down to 3 months, and let's narrow in on the chart here. So if we look on the day that trade was made, the high, like if you look over here, when I hover over this, the high was actually over the short call strike. It was $12.51, and this person was selling the 12.50 calls and then buying the 14 strike calls. Now that's pretty close to the money, especially since the stock is really pretty low right now already. I was trying to figure out, what is this trader trying to accomplish? And I think it's just simply a play on short interest, somebody who wants to short it. And instead of shorting the stock and having that show up, as more short interest and showing up on people's radars, I think he's just taking this sort of less than 2 day bet that it's going to stay below $12.50 because there's such high short interest, and just buying the 14 strike calls to reduce the margin of selling naked calls. I think it's basically a naked call trade with a long call, possibly for protection, but more likely to just simply reduce margin. Now, another one I'd like to look at right now here is Oracle. So on this day, this was another less than 2 day trade. Somebody sold 600 of the Oracle, less than 2 days to expiration, 87.88 call spreads at just 14 cents. So let's take a look at that one. So ORCL. Now, if we look at this is a day when the market was looking pretty weak. There was a fair amount of talk about, recession being inevitable. The market was kind of selling off for fundamental reasons and for technical reasons. And I believe that somebody was looking at the broad market and then going in to look for stocks that, in their opinion, were both fundamentally and technically weak. And so that would be Oracle in this case. So I think that they were just taking a bet that over just the next couple of days, the market would sell off, and they wanted to, instead of, shorting or buying puts in the S&P 500, they wanted to do it in the most conservative way possible. And so to use a credit spread because there's limited loss potential, and then also to make money from time decay, and then also doing it on a stock within the market that they feel is weak, that is the weakest of the weak, just basically trying to put all the odds in their favor. And then let's look at one more here. Let's look at ENPH. Okay, so with ENPH, somebody sold 1,000 of the February 3rd 225 put credit spreads. Okay, so let's take a look at ENPH. Oops. ENPH. And so this one, remember, they're selling the 225 strike puts. And so, look, the stock, it came down, and there is some pretty solid, at least short-term support at $225. So this one, to me, is a lot more classic of a play. And by the way, they sold that spread at $6, so they have an extra about $6 of wiggle room. And there's a bunch more support at about the $220 level. So I think that this is what I would just simply call a traditional put credit spread where they're looking at support levels and thinking that support will hold. So those are 3 use cases that I've identified that professional traders use when trading credit spreads that I've noticed pop up on Credit Spread Genius. I hope that helps. This is Dan Passarelli, Trade Smart.